Hi, hello and everyone. This is Shiva from scalperpros. In today's video, we are going to be seeing about Nifty P ratio. Yes, in the last 3-4 years, you would have been wondering what the Nifty P ratio has been doing and what the market has been doing. History would have been told you that Nifty P ratios, whenever it crosses 26, it's not the right time to invest in the market. In today's video, we are going to be seeing in deep down what is the best levels to watch and what are the levels wherein you can invest in the Nifty or in the Nifty 50 stocks. Can we get into the video? When I talk about Nifty 50 P ratio, what is price per earnings ratio? Whatever the price which the company is expected to be like and making it in the future. Say for example, if you know that the company is valued currently at like an 1 billion, in the next 2 years you are going to be thinking about the company making a revenue of another 2 more billion, then people will be ready to buy it at a higher P ratios. That is the price per earnings ratio. If today the company is earning 1 billion, if you are expecting the company to earn another 1 or 2 more billion in the coming years, the investors will be ready to pump in the money in that particular company. So, with that regard, imagine if the companies are like making and returns based on the past history. Whenever the Nifty P ratios reaches a level of 24, 25 and 26, usually the investors stay on the sideline. The averages has been whenever the Nifty P ratios reaches 26 to 27 odd levels, the next 3 years returns on that particular Nifty 50 stocks would be less than 35% or it will come down by 35%. In that scenario, should I really be investing? Many people since 2017 to now have been wondering why the Nifty P ratios have been traveling around 28, 29, 30. In fact, in the reason after the COVID period, though the price or the earnings have come down, the Nifty P ratio stayed at almost 37, 38. In fact, it has almost reached 40 levels as well. In this scenario, is it right time to invest? Honestly, many of the investors or the people who have been in the business will be telling you no. But market has been defying all odds. The market is positioning itself to say that I'm going to be giving you multi-year returns. Why don't you invest in all the companies? But trust me, guys, this is not the right time for me to invest into the market if I would have been saying based on the past history. But history is not repeating it now, and you are seeing unprecedented moves which has been happening in the Nifty 50 stocks. Something which was earning a less than a 10, 20 or 30% in terms of the Nifty PE ratios now are trading at an almost 100, 200 and 300 PE multiples. Honestly, this is not the right time for you to invest more. I would stay a little cautious considering the inflation and other things which is being going to be shooting up. With so much of money that is being printed not only in India, across the world, you are going to be seeing another interest rate cycle which is going to be going up. Why I say that? Looking at the commodity prices which has been powering and towering in the last 1 week or so, or in the last 6 months in terms of the steel or the cement prices, you will be wondering why the prices have suddenly scaled up so much. Are the demand is back up? It's not only about the demand. When you have so much of money in circulation, the demand is the same, but the amount of people who wanted to purchase is getting more and more money power, and they are ready to pay a higher price to get the same product which is available in the market. And that's a reason, if you have seen in the crude also in the last 1 week or so, even though the crude output and then whatever the demand consumption, it is more or less the same, the crude prices have been going higher and higher and higher. India as a country wherein we import almost 80% of our crude, with this so much of price increase which is happening, you are pretty soon going to be seeing the petrol prices going to be staying above 100. In that scenario, what will happen to your prices which you're going to be buying as a vegetable or a daily commodity which you're going to be using it in the day-to-day life? Everything is going to be seeing a rise, and indirectly it is going to be putting a lot more pressure on your pocket. In that scenario, the RBI, which is going to be keenly observing the inflation, they will definitely tend to increase the rates on the interest rate. When they are doing that, you will obviously see the prices on the bank interest and the interest rate they charge on the customers for the home loans or the personal loan, it is again going to be going up. That's not going to be a good news. So up ahead, you are going to be see some kind of volatility, and with this Nifty P ratios, I'm expecting some kind of a market correction to be happening in the coming months. That will be the ideal time for us to enter into the market. So ideally, where should I be entering into the market? When the Nifty P ratios is about 28 to like 30 or 35, the best time is do not look for long-term investment. That is the time for me to exit and take a vacation and then stay light with the liquid cash. The best is when it comes to below 20 odd levels, 20 to 17, if you're getting it, that's the best time to enter into the market. Between 25 to 20, start researching. 20 to 17, start investing. 17 to 15, invest whatever that you have parked in other liquid funds. That's the best time to invest. And when you're getting the Nifty P ratios below 13, big borrow steel and then invest it in the market. That's the best way to do it. And that is the best time for you to build your long-term portfolios. So time and again, history has proven whenever the Nifty P ratios went below 15, in the next 3 or 4 years, you will be getting an amazing return. What we have been witnessing in the last 3 years, it's been unusual. History has not shown you this kind of a movement, or history has not given us the clue that whenever it goes above 30, you are going to be getting this kind of a return. So next 3 years, start observing it, and as and when, if you are getting the Nifty P ratios coming below 25, 20 odd levels, start investing and you wouldn't repent 3 years down the line. But most importantly, do not try to invest in all the sectors. Try to see which are the sectors which is going to be giving you a reward in the upcoming cycle. Every cycle will have winners and losers. Maybe the next 10 years, it may be because of like a telecom or the electronic space or the electric vehicle space. Look at the companies which is going to be making a move on those areas and then start investing. I hope you guys would have liked the video on the Nifty P ratios. Look forward to sharing you more snippets on other areas as well. You will be seeing a lot more videos. Do like us, share us and subscribe the video, and then look forward to seeing you in another video on another time. Have a great day. Thank you.